we do have new features or new things on Trading 212. Unfortunately, we don't really want to talk about it too much, but it is a sign of things to come, I guess, is that they added 1,000 new stocks this week, but they all got added to the CFD platform. But interestingly, they were pretty much all from the Japanese exchange, which is an exchange that we haven't previously had access to before. So Steve and I were chatting as we normally do about this, and we thought to ourselves that'll be really interesting when we move on to when eventually you would assume if they're getting added to CFDs, they're going to eventually get added to the Invest and ISA. It's usually a sign that they're coming. So Steve and I thought, well, we'd have a quick look through basically what Japanese stocks would be interested in, and we thought, why not start with the ones that Warren Buffett looked at?
Yeah, Paul, you know about these. He owns the kind of 6 major trading houses. You did a video on them once, I think. How many of them can you name still?
How many can we name? Sumitomo.
There's one.
Matsu something.
Half a point.
No, that's about me done. I can't remember them.
Okay, I mean, that wasn't bad. You had Mitsubishi, which is the one you might have remembered from making sort of microwave ovens and cars and everything in between. Mitsui, which might have been where you were going, Itochu, and Marubeni being the other ones of these. These are the kind of things that occasionally catch the eye of Buffett followers like me, and to be honest, the main thing I'm looking forward to is seeing all these Berkshire Hathaway portfolio pies that we kind of see in the social area get updated with the kind of actual non-US bits of it as well, because those are sort of fairly well known about, and I'll be interested to see how people kind of add those into their copy pie things that are updating. But Steve, what is a Japanese trading house?
Okay, so a trading house is well for starters, Japan is an island with like very few resources. It doesn't grow very much food, and it doesn't have very much space, so it has to import a huge amount of the goods that it uses. So it does the vast majority of it through what are known as sogo shosha, or trading houses to us. They were developed in the late 1800s. This was to help Japan's crumbling economy. They were a vital part of propping up and rebuilding Japan's economy after the Second World War. So their biggest asset is their size. So this allows them to navigate volatile currency markets. They use smart hedges, things like forward contracts. It means that the products they purchase for Japan generally avoid huge price fluctuations. Their huge economies of scale also allow them to get discounts from manufacturers or suppliers, and obviously reduce transport costs, things like that.
Pretty much. So why does Warren Buffett own these things, do you think? I'm going to get there first before you get to me on this one, because I don't know the answer.
Shit, am I supposed to know the answer?
No.
Well, my guess would be that these are very good entrance into Japan. They cover a wide range of lots of the products that Japan makes and ships, and they trade at very decent valuations, and they have actually performed over a longer period of time, usually better than the Japan indexes themselves. So if you wanted a wide-ranging index-like coverage of Japan, rather than picking the index on this occasion, it's usually better to go for the trading houses themselves.
Yeah, so that's an interesting kind of thought by the way that they're kind of thinking about this. It's worth noting then that Berkshire have ramped their kind of investment into these by a significant amount compared to where it was before, and not a significant amount compared to Berkshire Hathaway in general. So Mitsubishi, their stake is up by 31%, Mitsui up by 32%, Itochu up by 24%, Marubeni up by 33%, and Sumitomo up by 30%, as in that's how much they've increased their investment by. So they put another kind of quarter to third into sort of most of these things. That only takes it to about 8 billion in total from what I was seeing of it, which is about 2 Taiwan semiconductors worth or so across the whole 5 of those. So they're not massive positions in this kind of scheme of things. But yeah, they seem like sort of fairly diversified bets across a particular kind of area. It reminds me a little bit of their approach to pharmaceuticals, which was, I don't know which one's going to do best out of these, but I think good things about this sector in general, so I'll go buy a load of them. And in this case, there's sort of 5 that stand out as the biggest and the most likely, I guess, along the way if you believe that commodities prices are going to stay high, I think they get hit fairly hard when commodities prices go down. And since they tend to believe that most currencies will deflate, commodities prices will presumably stay high-ish over the long term. CF, that bet on oil that Buffett appears to be continually pushing along.
Yeah, you've just basically covered my only input on on that bit there, because I didn't know you were talking about this. But yeah, the trading houses take in all commodities, and they actually have it involved in their inflation protection. So when the commodities go up, they get to keep the profit on these commodities going through, which is very important. High cash flow businesses, as far as I could tell before, I don't know what they're like now, but these are just solid, stable price movements all the way through. They've been pretty much flat for years, but it's because, and we'll bring it down to dividend, it's because they give out so much of that cash flow to the investors, and it keeps their price pretty much flat. But you still, as far as I can remember, particularly on Sumitomo, you're still making sort of 10 to 12% a year just based in pushed off cash flow. That I don't know for sure, but it's something that I remember. And I think they even had a yield back when Warren Buffett bought them of about 20% based on the special dividend that they kick off every now and then. So, I mean, I put this down. I think I mentioned this to you guys in Discord. I put this buy down initially down to the amount of cash flow that comes off these businesses in comparison to how much money is flowing through them. And now the double down just tells me that they are using it as an inflation protection as well.
The double down now is kind of interesting. Buffett was buying these, or it was kind of initially announced back in sort of 2020. It felt more recent than that to me, actually, considering we're now sort of basically 2 years on from that, or at least 2 years on. And since then, apparently, the stocks have done sort of fairly well. I don't follow these kind of at all, but since then they have apparently moved up a little bit, which sort of tells you that Berkshire are likely leaning into this as share price goes up, and it's not automatically the case they kind of buy things on dips. They've been buying Chevron, that's been going higher and higher. They've been buying Occidental and chasing that one higher as well. It looks kind of commodities-like interesting to me, following this sort of oil idea. I don't know much about the dividends. I hadn't looked very closely at them particularly.
One of the other things as well is that I don't know whether you guys read fairly recently that Japan have kind of lent into this fear of China and Taiwan conflict in saying, well, we're not a million miles away from Taiwan, so we could take some of that semiconductor burden off you. So they've 8 of the biggest companies in Japan have basically formed this consortium to start creating 2-nanometer chips. That's their idea within the next 5 years. They're going to be, I think it's called Rapidus off the top of my head, Rapidus. And I know it's got Toyota and Sony and some other companies in the NTT, one of the big telecoms consortium. But the idea being that they'll be using IBM's fabrication method to try and make 2-nanometer chips. So this is a really interesting little idea for Japan, and they make none of this they can get from their shore. So all of this, if they end up being a big fabricator, will have to come from elsewhere, and it will have to come through the trading houses. So potentially this is Buffett looking at TSM, looking at Apple and thinking, you know, these guys will also have a hand in this if it happens. So it's kind of covering all the bases.
It's a very interesting method and lesson to learn about how the world changes and how the power changes, to see that TSMC might be outsourcing their chip making to Japan. Very interesting. Whereas 20 years ago, you'd have said that would have been absolutely crazy. But that'd be very, interesting stuff. I never heard that. I hadn't heard about this Rapidus company, but I'm just having a quick read now. They really do want to go to 2-nanometer. That makes, that widens out everything. It creates diversity. Toyota, Sony, and 6 other major Japanese companies. I imagine Nikon's going to be in there as pretty much the only semiconductor manufacturer in Japan.
I don't think they are. No, I don't think they are. I know the chairman of the board is from Tokyo. He's a former CEO of Tokyo Electron, who is obviously, they do they do the crappy chips. They do, I think it's 10 and 12 nanometer chips at the moment. That's the best they can do. He's heading it up. So I don't know if he's necessarily the right person for the board. He might be the only person in Japan with any real experience of making chips in that kind of regard. But I think the 2 nanometer process, from what I understand of IBM, I know they've cracked it, but they've only cracked the way of making one of them. They've not cracked making it at scale. And ASML will tell you quite comfortably that they can make it chip as small as you want, but they can't make thousands of them. And that's the problem.
Yeah, definitely.